Hey all, good morning and welcome to Share Trek. This is Raj here, and today I'm really happy to mark the first anniversary of Share Trek. On 7th of November last year, I started this channel, and many of you joined me along the journey, and we have around 808 subscribers as of last count. And I'm really grateful to each and every one of you for choosing to subscribe to this channel and helping me grow this channel, giving me motivation to continue bringing out more improving content on a daily basis. And also to all the viewers who have been watching the videos, we have had so many views out here, more than 450 videos. And I thank all the viewers who have been watching. And I request that if you have not yet subscribed, please subscribe and join this incredible journey. And yeah, with that said, I think I'm incredibly grateful that I have this good fortune of having this platform, and you guys have helped me build it. So thanks. Without further ado, let's go on to the topic of today's video. It's Pacific Biosciences. In the morning show, I didn't talk much about PACB, but PACB came out with their Q3 results. Of course, there's been a little bit of bad news in there from a financial perspective, but overall, I'm still bullish on PACB. I'll explain why when I talk about it in the conclusions. But let's get started with looking at their Q3 results and see what we can find there. Welcome back, friends. So I'm going to start off by presenting two slides, and then I'll come and talk to you face to face in the conclusion section after that. So those two slides contain the financial information as well as qualitative information from PACB that I have collected from their Q3 earnings results. So let's get started with that. Well, here we are in a slide that I created by taking out numbers from their earnings release. Because when numbers are put in a prose format, it's very difficult to follow. So I thought I'll put it in a spreadsheet and present it to you here. So as per their Q3 results, their revenue was 32.3 for the last quarter as compared to 34.9 for the same quarter last year. Instrument related revenue from this 32.3 was around 11.4 million as compared to 15.9 million. So they had a drop in the instrument related. And friends, I can explain the reason why this could have happened is because people who are going to buy a sequel to E-System would rather wait for the review and the Osno to come out and go for those. So next quarter, I expect that instrument revenue will jump up a little bit because there is much more economy of operations in the new review and Osno systems. And I think that could explain the reason why there is a drop. And another thing we have to remember is that when we are in the midst of high inflation and difficult economic circumstances with interest rates going up, so it's a difficult environment in which the business is operating. Their consumable revenue has gone up 16.1 million as compared to 14.6 million in the same quarter last year. So there is a growth out here. Their services and other revenue has gone up by 0.4 million. That is, they came in at 4.8 million as compared to 4.4. So in my personal opinion, of course, this is not financial advice, but you guys also think in your own mind. Let us say you're going to buy a BMW or a Toyota this year, and then you know that the company is going to come up with a new model in a couple of months. Are you going to just go ahead and buy the old model? If you're buying the old model, you're going to ask for a discount. Because the company wants to clear the inventory, or you're going to wait for the new model to come in. Either way, the revenue for the company is going to go down. Same thing with iPhone, right? If iPhone 14 is coming, who wants to buy iPhone 13 if iPhone 14 is coming within a week or so? So that's the kind of dynamic which is applying here, and that's where you see the biggest drop, which was around 4.5 million drop in revenue. But this is definitely going to bounce back next quarter, in my opinion, as soon as we have the Osno and the review system getting into circulation. And then if you look at the delivered number of machines, they delivered 34 Sequel 2 or 2E machines in the last quarter as compared to 44 in the same period in the previous year. Same quarter in the previous year. So there's a drop of 10 out here, and this is reflected also in the instrument revenues. If you look at the installed base, it has gone up to 494. And friends, as I keep on hammering the point, increased installed base means there is going to be more consumable sales, and there's going to be more service and other revenue. And also, it's going to be a captive market for upgrading the systems into new systems, and so it's a very important foundation for the company as this number keeps on increasing. Again, their gross profit was down. It came in at 13.5 million in the last quarter as compared to same quarter in the previous year, where it had come in at 15.4 million. But most of that accounts from the instrument sale drop. Their operating expenses were 88.2 million as compared to 89.8 million in the same period last quarter. Their net profit or net loss, their net loss came in at 77 million as compared to 16.5 million profit in the same quarter last year. And their cash balance came in at 834.3, whereas it was at 1044 million in the same quarter last year. So right now they're at 834.3 million. I'm still curious about how come they raked up such a big loss out here. There were some mergers and acquisitions that the company had indulged in. Maybe some of those costs came in. They also have stock-based compensation. So some of that could be part of what is reflected out here. But I'll search for that information and come back to you later. But at this point of time, I am not yet that worried about the company, because just one quarter and they are changing from existing SQL 2 and 2E system and introducing new high efficiency models. They have introduced Review and Osno. So definitely there was likely to be a hiccup in this quarter and potentially part of next quarter. So the second quarter of 2021, the first quarter of 2021 will actually see the advantage that comes in from Review and Osno, and that will be a much better indicator. And I'm also not a big fan of selling a share as soon as you hear a news, because the cost of doing such a thing can be pretty high, because we can't always reflect the value of the company in our holdings, and we lose a lot of money in the process. So we got to be a bit patient and understand what exactly is happening in the company, and use dollar cost averaging opportunities when the business concept is still valid and strong. And that's what I think is the case with PACB. All genomic companies need to use a sequencing system. All universities and research institutions need to use a sequencing system. And now even many diagnostic companies and hospitals will need sequencing systems. So it's a super set of requirements of many other companies in the industry. And therefore, there will always be a big market for genomic sequencers and the consumables and services that are being provided. And therefore, I think the company is in a sunrise industry, and I wouldn't worry too much about a small hiccup in a quarter. That's my personal opinion, of course, not financial advice. That said, let us look at some qualitative information that I gleaned from the Q3 earnings report. The first one is the launch of Review and Osno. I have done a dedicated video on this, guys. You can have a look at it. If you have not done, please get into the homepage of the channel and look for PAC Bio. You can always search on PAC Bio. The latest video is on Review and Osno. They are two really good improvements on their existing systems, and they bring the cost of whole human genome sequencing to below $1,000. And they also allow for loading consumables while the operations are still on. There is a lot of great improvement and cost savings out there. So that's exciting. The other thing they have is that they launched the MAS mass sequencing kit in partnership with Broad Institute and 10x Genomics. This is again a good example of the great collaboration that Pacific Bio has been able to execute on. They also collaborated with Twist Biosciences to introduce Twist panels. I have done a video separately on this. You can check it in our homepage. And they also introduced TRGT to profile tandem repeats. Again, I have done a video on this. Tandem repeats are very important because they signify various genetic conditions. And I think there are only 26 tandem repeats right now known. And this introduction by Pacific Bio enables to find more. And they have shipped the 1,000th sequencer since the launch so far. So that's again another big milestone for this company. So all these are great achievements. Apart from this, in terms of governance within the company, they have invited external experts to form an advisory panel to guide the company. That's again a big positive, in my opinion. So overall, I think I'm pretty happy with what Pacific Bio is doing. in terms of being a business and the direction that they are taking. In the long-term picture, I'm really happy about Pacific Biosciences, where they are going and how they are giving a good amount of competition to Illumina, which is a much bigger company. So from that perspective, I'm really happy for Pacific Bio and very bullish. In the short term, if we look at this quarter results, I think it's a bit concerning to see a loss in the quarter. But if I look at where the loss is coming from, I suspect that it's because of the introduction of the new models and potential customers waiting to go ahead and buy the new models. And I predict that in the first quarter of 2023, we'll be seeing a jump in their sales, because the people who already are using their systems may even decide to buy the new system or upgrade into the new system, so that captive market is also going to kick in. So overall, I think that the drop in the share price that we see right now for Pacific Biosciences in the pre-market that we saw in the morning, I'm recording this at 9:23 a.m. on 8th of November. So there's a pre-market drop of another 2% or something, apart from a 5% drop yesterday in the post-market session. So I'm thinking that it's an overreaction. This is still a very good company. If I had the money, I'd definitely pick up some. Of course, that's my personal opinion, not financial advice. So please do your due diligence before you invest. So with that said, I would like to bring this video to an end. And my conclusions, as you know, is that Pacific Biosciences is a great company. We got great new models coming up. Revio and Osno, they are going to add to the business. They have got a great installed base, which is giving ever-increasing supplies and consumables demand. So overall, a great company. I think the drop in the share price is a knee-jerk reaction. Things should pick up. I personally would be looking forward to pick up more shares of Pacific Bio when the price drops further, because then it will become more attractive for me. And at this point of time, honestly, I don't have adequate funds remaining to deploy into the market. And as I said in my earlier videos, one has to keep around 12 months of living expenses in this kind of economic scenario. So I wouldn't be putting any more cash into my portfolio anytime soon. So that brings me to an end of this video, my friends. If you like this video, please press a like out there. And if you're not yet subscribed, please subscribe and help us grow this channel. Thanks and have a great day. Bye for now.